Good morning everyone and welcome to another RF Crypto video. Today's markets are down by 4.2% and the global crypto market cap now stands at 1.77 trillion. If you remember correctly, last month the global crypto market cap went up all the way to 2.2 trillion and it has lost a significant portion of its value. And this is due to a lot of factors, including the hawkish statements from the Fed, the fact that they want to increase interest rates and tapering. Also, the geopolitical situation occurring in Eastern Europe is affecting the crypto markets because it is an uncertain time. And in uncertain times, people want to remove money from the riskier assets, which crypto is one of, and move it to safer assets like stocks, bonds, and maybe even cash/fixed deposits. So looking at the market, everything is on the red. Bitcoin is down by 3%, Ethereum down by 5%, BNB down by 5%. Solana, it hit 120, 130. A few weeks ago, it's back down to below 100. Your meme coins are also taking a beating, with Dogecoin and Shiba Inu going down by 7%. Yeah, the markets are basically red. Obviously, we see a few greens, but this is due to token-specific factors that have nothing to do with the market. Looking at the Bitcoin chart, we see that on the 22nd of April, there was a massive red candle which saw the price of Bitcoin going below the $40,000 support level, and there wasn't enough bull action to move it up above that level again. So it stayed below it, with 40,000 being the new resistance level and 38,000 being the new support level. And over the weekend, the price of Bitcoin sort of traded laterally very, very close to the resistance level of 40,000 before it took a beating yesterday evening, and it went all the way down to about 38,200, almost testing the $38,000 support level. Once the levels got that low, the bulls finally came into action and pushed the prices up so that it minimizes their losses, because all these bulls have positions in leverage positions that are long, which means that they want the price to go up. And if the price goes significantly down, they can lose their whole investment. And as I said before, this is always a tug of war between the bulls and the bears. So first African country adopts Bitcoin currency. The Central African Republic has become the first country in Africa to adopt Bitcoin as a payment currency, and the application of the legal tender implies the acceptance of cryptocurrencies as a legal means of payment, which was established through a specific legislation, which means that it's law. And with cryptocurrencies, the Central African Republic is moving towards a new, avant-garde path of development and economic performance, a dynamic field which is popular among investors around the world and ever present as full-fledged assets in the portfolio of the world's largest financial players. So what this is basically saying is that cryptocurrency is becoming more popular, a lot more companies are investing in crypto and adding it to their portfolio, and a lot of influential individuals like Elon Musk and Kevin O'Leary are also purchasing Bitcoin and adding it to their portfolio. So it kind of makes sense for countries to start riding the bandwagon, and the Central African Republic went to the extreme by adopting it as a legal tender. And this initiative will completely transform the country's digital infrastructure by applying the blockchain technological innovation necessary for the project's implementation. And not only will it improve the whole ecosystem by improving processes through blockchain, but because the Central African Republic is a third world country with high levels of poverty and low levels of financial inclusion, and which means that a very small percentage of their population have bank accounts, all they'll need now is a cell phone, a crypto wallet, and they can be trading it with Bitcoin. It'll open up a lot of opportunities for informal traders especially, and for people below the poverty line to get included in the financial system and sort of have like a pseudo bank account, which means that they'll have sort of a bank account as their wallet without actually having a bank account. This will create a lot of new opportunities in commerce and trade, which will lead to increased trading activity due to the fact that payments will now be made easier. And if they can implement the Lightning Network to work with Bitcoin as a legal tender, then it's going to be game-changing, because Bitcoin itself is quite slow and expensive in terms of fees. But if they can implement Lightning Network, then they can scale that in the sense that the payments are instantaneous and they're almost free. And with the country that has so many financial problems and people below the poverty line, they cannot afford to be paying fees above what they're transacting on. So it kind of makes sense for the Lightning Network to follow the implementation of Bitcoin as a legal tender, as it will be a win-win situation both for the government and for the population. So Grayscale renews push with SEC for Bitcoin spot ETF. which was quite expected because of Tickrum's Bitcoin's future ETF being approved under a different law than the previous three futures ETF that were approved. Grayscale has renewed a months-long push to persuade SEC to approve converting the crypto investments firm's $40 billion Bitcoin trust into an ETF. So there are two types of Bitcoin ETFs, Bitcoin futures, which are derivative contracts. The contract's value derives from the price of Bitcoin and speculates on the price of the cryptocurrency. And we have Bitcoin spot, which operates on Bitcoin's current price. So Bitcoin spot, if you have a certain market value of that ETF, it needs to be backed with actual Bitcoin in the treasury. And this is where Bitcoin spots are safer than futures because they actually follow Bitcoin's current price and they do not speculate on the price of the cryptocurrency. So there has been no Bitcoin spot ETFs approved in the US. Obviously, it will be the first of its kind if approved, which I see very unlikely because there has been continued reluctance by the SEC to approve the spot ETF, but we are getting closer to it. So, as I said before, Grayscale's attorneys argued that the manner in which the regulatory agency or the SEC approved the fourth Bitcoin futures ETFs, Ticrum, earlier this month, opened the door for a Bitcoin spot ETF. So Grayscale's attorneys said that for the first three Bitcoin futures ETF, they used the Investment Companies Act of 1940. However, with Ticrum, it was approved under the Securities Act of 1933. So the SEC had previously stated that the 1940 Act offered certain investor protection not covered by the 1933 Act, and the implication is that because Bitcoin spot ETFs couldn't be filed via the 1940 Act, they offered insufficient investor protection. Now, because Tickrum's approval was done via the 1933 Act, they believe that this confirms the fundamental point that when it comes to approving ETFs, there is no basis for treating spot Bitcoin ETFs differently from Bitcoin future ETFs. And this makes sense because if the 1940 offers protections that the 1933 don't, and that was the basis for not approving spot ETFs, that basis or that argument falls out of contention because now a futures ETF was approved using that law. So if a futures ETF can be approved using a law that offers less protections, then why can't a spot Bitcoin ETF? It makes no sense. So I don't see the SEC approving their spot ETF right now, but I think that within this year, a spot BTF will be approved because there's been a lot of relaxation on the part of the SEC in terms of which regulation they use to approve the futures ETF, opening the door for spot ETFs to be approved as well. So Kevin O'Leary spoke a little bit about clean Bitcoin mining. So he is, as we know, a very wealthy individual with an estimated net worth of $400 million, and he is also a massive crypto investor. However, in the past, he has criticized Bitcoin mining, suggesting that companies should be segregated into clean Bitcoin from dirty Bitcoin mined using carbon intensive purposes. And this process of separating clean Bitcoin from dirty Bitcoin may break Bitcoin's fungibility, which is the ability to trade Bitcoin easily between different individuals. And obviously this makes sense because a lot of people will only want the clean Bitcoin and ignore the dirty Bitcoin. They wouldn't want to be associated with fossil fueled mined Bitcoin. That is a good point, but also we have to see that if you separate clean from dirty Bitcoin, it will incentivize those miners that use dirty methods to mine Bitcoin to switch to clean energy. So there are two ways to look at it, and the latter way I think makes more sense because it actually pressures those miners to come and explore more clean mining or greener mining pastures. And he has also said that nuclear and hydropower will likely loom larger in the crypto mining energy mix because many new power plants have come online in the US in the past year, largely in Texas, Oklahoma, New York, and the Pacific Northwest, drawing on renewable and non-renewable sources. And like other crypto-minded businessmen, O'Leary suggested that the energy-intensive proof-of-work algorithm used to mine Bitcoin could drive wider adoption of green energy. And this obviously makes sense because these people don't want to be associated with dirty energy, so they will find very innovative ways for green mining. And one of them is when miners use the residual gas that would otherwise be burnt off by oil miners, they use that gas in order to fuel their mining rigs. And that is very innovative. And I think that he's completely right here. This innovation in terms of green energy in the Bitcoin mining space, it will trickle its way to the green use of electricity for widespread usage. And I think this is where the real promise is in terms of proof of work. And also, although politicians, including Senator Elizabeth Warren, have been critical of the mining industry, O'Leary doesn't think that it will stymie development, especially once crypto miners realize that it could be more profitable working within the regulatory system. If there is a regulatory system and regulatory framework in place, the miners will know exactly what to do, which limits to stick within, and the regulators will be happy and everyone will be happy. If there's no regulation in place, the miners will do what they see is best in terms of profitability. The reluctance to release a regulatory framework, especially for Bitcoin miners, is quite confusing for me because it is a win-win situation for everyone. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the video, please consider leaving a like, hitting the subscribe button, and sharing this video with your friends and family. Invest wisely, and cheers.